But of course, in the big picture, we have all these other concerns, with inflation and debt and deficit spending and perhaps even a deflationary slowdown and a bloated stock market. So there's a lot of reasons that I believe gold and silver will continue to move higher as we go forward. So any pullback, in my opinion, would just be something that would be temporary.
Welcome to Wealthion. I'm Wealthion founder Adam Taggart here. I'm being joined today by goldsilver.com's precious metals senior analyst, Jeff Clark. Hi, Jeff. How you doing?
I'm doing great, Adam. It's great to join you again.
Thanks. Well, look, we're filming this on Friday, March 18th, right before I hop on the road for a week. And you've kindly made yourself available so that folks have some interesting content to watch while I'm away. And speaking of interesting content, since the last time you were on this channel, which was over a month ago, things have gotten very interesting in the gold market. And there are a couple of things I'd like to talk to you about. One is to get your general reaction on the action in gold that we've seen over the past month. It really began waking up. We hit an intraday all-time high almost 2 weeks ago. Price has drifted down a bit since then, but it's still, in the 1900s. So curious to get your thoughts on sort of where we are in the grand bull cycle that we think may have started off here. Secondly, there's been some really interesting news, which maybe we can dig into in just a second, where meme stock AMC, which is a movie chain company, ended up buying a very junior mining stock. So would love to get your reaction to that very unexpected news. And then third, when we had you on this program last, you revealed your personal mining picks for an index that you call the GDX Jeff. And very courageously and publicly said you're willing to be measured against the GDXJ, which is the junior precious metal stock mining ETF out there, betting that your portfolio will beat that over time. So I'd love to check in with you on how that index is doing. So if we can tackle maybe that list in order. We've got gold prices briefly back at a record high. Where do you think things stand right now as you look at the market?
So it's interesting how gold went on a little run there, about $250 in a relatively short period of time, right? A lot of that was the Russian invasion of Ukraine. But of course, gold had been rising prior to that too, due to inflation concerns and things like that. So it's not surprising, given that short, sharp run, that gold would take a breather here. It behaves like many other assets, right? When it goes on a big run, it's not uncommon for it to take a breather. So it wouldn't be surprising to me to see the gold price and silver kind of go sideways for a little bit here. I don't know how long that'll be, but my point is it's not surprising to see it kind of cool off a little bit. And as we pointed out before, geopolitical issues and conflicts are not kind to the gold price when they resolve. So if there's a ceasefire or something that happens over in Ukraine, some peace talks or something like that, end the conflict, it would not be surprising to see gold and silver fall temporarily on that. But of course, in the big picture, we have all these other concerns, with inflation and debt and deficit spending and perhaps even a deflationary slowdown and a bloated stock market. So there's a lot of reasons that I believe gold and silver will continue to move higher as we go forward. So any pullback, in my opinion, would just be something that would be temporary.
Okay, great. So you sort of look at this, the most recent action, meaning sort of the cooling off from the all-time high that we just saw last week, as sort of a expected and understandable correction that you would see as prices beginning to hopefully continue that bull run that we've been talking about for many months on this program. All right, so let's get on to the next bit of news, which was AMC Theaters buying Hycroft Mining Holding Corporation. They actually bought a 22% stake in this miner. I'll set the stage just a tiny bit, Jeff, and then I'll let you jump in here. So I would think it's fair to say that they sort of shocked the world with this acquisition. I think nobody, before the news was announced, could come up with the logic of why a movie theater chain should buy a mining company. And a really wonderful piece was just released today by Doomberg, who we had on this program a couple of weeks ago, really digging into this transaction. And if you look, at least looking through their eyes at Hycroft, not only is it a junior mining company, but it was a highly distressed junior mining company. It was had many years of upheaval. Seems like a couple of years ago, the company placed all of its bets on this proprietary technology they said they were developing to be able to extract gold from the sulfide ore, which I guess is the type of ore that's in that mine. So gold is trapped in that sulfide ore, and elsewhere in the industry, it's hard to extract profitably. But somehow Hycroft said, "Trust us, we've got this great process underway." They raised some money around it. I think they raised some debt from Eric Sprott's group, or at least from Sprott Inc. Doomberg sort of iterates all the stumbling blocks along the way. But I know by the end of 2021, by Q3 2021, which wasn't all that long ago, the chairman of the board resigned, the CEO resigned, they fired half of their workforce, and they ceased all run-of-mine operations. So this was a highly distressed property. Now, the CEO of AMC has said, well, we're familiar with highly undervalued companies, and we just sort of turned around ourselves. We're going to help this company turn around. I don't know what a movie theater executive thinks about running a gold mine, particularly one that's really in trouble. So I'd love to get your reaction. My 2 cents is this is probably a good step for the mining industry, that it's just waking up a lot of people out there, particularly kind of the Wall Street bets crowd that's been heavily invested in AMC, to the story of the precious metals mining industry, because it's a phenomenal story. And I think it plays along well with a lot of the reasons why these small traders are trying to take on Wall Street. But I presume, Jeff, that you would have recommended the AMC CEO buy a different miner than he did.
Well, a couple of things. First, we have long speculated that a manufacturer that requires silver, gold, battery metals in their manufacturing processes or their products might come along and actually buy a miner that's producing the metal or would soon be producing the metal, because it locks up supply for them, right? The fun example would be Elon Musk at Tesla, him buying maybe a silver mine, because he's going to need a lot of silver if he comes anywhere close to reaching his goals by 2030 in terms of auto production. An EV, electric vehicle, uses about 2/3 more silver than an internal combustion engine. So it's actually bigger than Elon Musk. It's any EV manufacturer. So there have been a couple that have come into the battery metal space and started buying into mines. And again, it's to shore up supply, so they make sure they always have that supply available to them, right? That's not what this is with AMC. AMC has nothing to do with gold and silver manufacturing, them being used in their manufacturing or their products. Although I guess we could say this gives new meaning to the word, the silver screen, right, Adam? So sorry, that was a bad pun. But the point is, this has nothing to do with that. They didn't buy this because they need the product. They bought it simply for diversification investment purposes. They did get a warrant with their investment, so that might help them, but that's only if this mine does well. So it has been a problematic mine. They did have to shut production down. There's been a lot of turnover there. The mine is actually not too far from when you and I might drive over Interstate 80 in Nevada going east. It's not far off the interstate there, but it's a big operation. It's got 15 million ounces of gold equivalent in the indicated category. So they'll claim, some articles claim they had 20 million ounces, but you'd have to add in the inferred ounces. And inferred, technically aren't resources. You can't get a loan based on inferred ounces, for example. So in the more confident category of resources, they have 15 million ounces of gold, 1/3 of which is silver. So it's a big gold and silver operation, right? But it has had issues. Part of the issue is it is low grade. Now, a lot of big gold deposits on the Carlin Trend in Nevada are low grade. This one is no exception. But that means that costs are critical in terms of them being able to turn a profit, and that's where they've had an issue. But the point of AMC buying it is they bought it for investment purposes, just to diversify. And I don't like to say negative things about companies, so I'll just say that yes, I probably would have picked a different company when it comes to making an investment.
All right. So I want to pull on that for a second because I actually think you can make a really good case that companies should be sort of following suit. So totally agree with you that if you're a company that relies on any of these products, and I think your example of sort of Tesla and silver, that sort of just seems like a natural to me. But you have talked a lot on this program, especially recently, about what's going on with corporate buybacks. And the way a company usually sort of justifies a corporate buyback is, hey, we can't find a better investment out there today than our own stock, right? And I think in most cases, you react to that statement by saying, really? Of all the thousands and thousands of investments out there, your stock is the absolute best one, right? So I think for a lot of companies, it's not a crazy idea to say, you know what, like, let's diversify our investment portfolio a little bit. And I think buying some gold and silver in the ground, particularly given the macro situation today, not a bad idea, right? It's almost like a different way to hold some of your cash reserves in some ways, is a way to look at it.
I'm not being critical of the idea. I'm just saying I probably would have chosen a different target, a different mine. But yeah, that's my point really, is this is very interesting because it's a company in a completely unrelated field, simply diversifying their cash, because they were sitting on a lot of cash, by buying something that they think could be profitable. So what could be interesting is if you see other companies start making a similar move, buying into gold, silver, a mining stock, a developer, even an explorer maybe, simply because they want to diversify or invest in something that they think is going to be a good investment. So we'll see if this turns into a trend, but that's the very different part about this than what we thought was going to happen, where a manufacturer that requires silver would come along. That's not what AMC is doing, and so I wonder if other companies might follow suit.
Yeah, and that's sort of why I'm wishing along with you that they had picked a target maybe with some better prospects, just because I would love it for this to be a success for them and to give management and other companies the same idea, right? I'm going to put up a chart here too that Axel Merck sent out on Twitter this morning. The source is Bloomberg, but the chart basically here is mapping capital expenditure in the gold mining sector versus the gold price. And what you can see right now is the industry is just highly starved for CapEx. Very sort of historically low CapEx. And of course, the gold price is just hit an all-time high last week, as we just talked about, right? So what this suggests to me is that we're also potentially going to see a lot of acquisition going on in the mining space, because you've got those big producers that haven't invested in CapEx or have underinvested in CapEx, according to this chart, that now that the gold price is picking back up again, they want to get supply, but they aren't going to be able to bring it online quickly themselves. So I think they're going to go out and start buying these targets. What do you think?
Oh, absolutely. We are at the beginning stages of another cycle in M&A. The last cycle was from 2000 maybe to 2012, something like that. Then it went dormant, and now we're restarting another M&A cycle. And that's not just me saying that. That's many analysts in the industry saying, for many reasons, that we're on the cusp of another cycle of M&A. And the big reason is exactly what you say, because they're going to need ounces. Reserves are down globally, grades are down globally, cash that has been spent on exploration has been in mostly brownfields, meaning around their existing operations. Here's an interesting stat. In the last M&A cycle, I think they measured it from 98 to 2011, I believe. All the ounces that the gold producers had were mined out during that 12, 14-year period. So how did they replace them? A lot of them were replaced from their own exploration. But the growth, the increase in the number of reserve ounces that were found and acquired by gold producers were from acquisitions. 92% of the growth in gold reserves came from M&A in the last cycle. So that tells me if we have anything remotely similar to that, there's going to be millions and millions of ounces bought, in this next cycle. And that would apply to both gold and silver. Either way, we're on the cusp of another cycle of M&A. And so that's a very good strategy, I think, is to make sure you're owning the best of the best when it comes to, gold and silver companies.
All right, great. And so this is our segue into topic number 3 here, which is your current stock picks. What's exciting about what you're talking about there is that's when the mining sector really comes alive, right? That's when we begin to see kind of the crazy returns in the sector, is when all of a sudden there's sort of this scramble for gold. And the sector does well in general, but the smaller companies tend to do much better because they have more risk associated with them because they're out there exploring and developing mines. The producers are bigger. They've got bigger balance sheets. They don't grow as fast. So anyways, the real hot action, tends to happen in the smaller end of the sector there. So a couple of things I want you to comment on. One is, you want acquisition to heat up because that's what sort of begins to get that interest going, and it almost builds to sort of a frenzy. And when that's going on, a lot of these, companies, their share prices on the exchanges, start going up dramatically because people begin thinking that they might be acquisition targets, or they start just getting really excited about this. One of the downsides potential of acquisitions, at least in the early stages, is you can have these great plays that get taken out for a 50% or 100%
right.
premium, where you really want that stock to be like 1,000% returner, right? So
Yes.
There's a little bit of that risk. So feel free to comment on that in just a second. But also, it's the lower half of the market, the smaller companies that I'm talking about. So there's really kind of 2 main ETFs in this space. There's the GDX, which is those larger producers, and then there's the GDXJ. So we're sort of expecting the GDXJ to outperform GDX in this sort of next bull cycle. You've got the GDX Jeff, which you're saying you think is going to outcompete GDXJ. So with that context being set, tell us how Jeff's doing, and any updates on those companies that you want to share with folks.
Well, as far as the M&A getting bought out too early, that type of thing, yes, that is a risk. But again, that doesn't change our strategy as an investor. You still want to buy the best of the best, right? You still want assets that are big and rich, run by really good people, the best in the business in pro-mining jurisdictions. But yes, my favorite saying is, every manager before they get bought out is 5x first, please. That's why we're investing. We want that big run, right? But you'd still get a win if they do buy them out at a 30, 40, 50% premium. It's going to pick up. There's little doubt in the minds of most analysts that M&A is going to pick up. So, but again, our strategy remains the same. Go with the best of the best. And then yes, in our the bonus video I did there was the GDXJ, the Junior Miners ETF, versus my portfolio, the GDX Jeff. So which J do you want to pick was kind of my angle of that talk. It's doing fine. As you and I talk, it's up 13% since it officially started, which was January 24th, the first day after that video aired. But here's the thing about that portfolio. A lot of the companies have not released any real material news yet. So a lot of this pop has been just based on the movement of gold and silver themselves. There's been some news from some of them, but nothing real earth-shattering. So all the big news for these stocks, and the reason I picked them, is still ahead. So it's not too late to buy these. They're all up, varying degrees. Only one stock is not up. It's down about 2 to 3%, it looks like. But all the others are up. So, but my point is, all the big catalysts for almost each of these companies is still ahead. So it's not too late to buy it. So I'm very excited about that portfolio. I am personally heavily invested in that portfolio. So full disclosure there. But again, I own a lot of mining stocks, and these are the ones that I think have the best shot of doing real well. So we'll see. But we've got 10 months or so to go officially on that challenge. So we'll see how we do. But I like my odds.
All right. And so, folks, if you haven't yet watched Jeff's presentation where he goes into great detail about each one of the companies in that GDX Jeff portfolio, you can watch it here. I'll put up a link to it right here. You should definitely go watch that. Full disclosure, I own all of those stocks as well, largely influenced by Jeff and his master picking there. Yeah, so I know who to blame if this all goes wrong, but it's off to a good start, as Jeff's saying. All right, so Jeff, are you? Those prices really showed some life recently as gold and silver have gone up. They've cooled off a little bit. There's still some nice gains there, though. You just said you expect things to pick up going forward, especially as these companies start reporting their earnings or drill results and things like that. Are you adding to those positions at this point in time?
Well, I already own those positions. I have added over various periods of time. I'm pretty fully invested in that portfolio already. I've disclosed before that my two biggest personal investments are in that portfolio, the first being First Majestic Silver. And by the way, that's the leading performer. A producer is actually the leading performer in that portfolio. It's up over 30%. As you and I talk here in the past 6-7 weeks, whatever it is. So it's doing really well. And the reason it's in there and the reason it's one of my largest holding is because it has tremendous leverage to the silver price. It's up over 30% on a less than 10% move in silver. So that's why I like it. And then the second is Cassier Gold. I've talked about that a lot before. That's my second largest personal investment. A great future there, run by the top people in a pro-mining jurisdiction, one of the best jurisdictions. So it's actually the second best performer in that portfolio. So I own a lot of these, to answer your question already. I might, buy a little more if one of them sold off on some news that was not management's issue, was not their fault. So absent any, non-specific company news, then I probably won't be adding to them because I'm already very long. My point to anybody who's interested in it is it's definitely not too late. If I'm right about these stocks, and again, we take a basket approach because we might be wrong about one or two, right? But if I'm right about the basket in general, it's not too late because very few have released any material news yet. So I think it could be exciting, especially given the backdrop of where we think gold and silver are headed.
All right. And that's mainly why I was asking that question, which was, for somebody that hasn't bought in, is it still an opportune time? Sounds like you're saying totally not too late, which I'm sure is great for a lot of folks to hear here. One thing I just want to touch on too that you mentioned. So First Majestic, you said is highly leveraged to the price of silver, meaning when silver heads in a direction of a certain magnitude, First Majestic heads in that same direction, but usually at some multiple of that magnitude. There are ETFs out there that track the price of silver. There are some that are leveraged. I'm thinking specifically about an ETF called AGQ, which I think is a 2x silver fund, which I have owned at times. And those leveraged ETFs, they have a tracking issue that over time they begin to sort of separate from the activity of the underlying metal. But they also have these costs that the longer you hold them, they hold futures contracts basically, and they have to keep rolling over those contracts. Right. And that cost reduces the gain of the ETF over time. And so, I sort of woke up to the fact that First Majestic was, basically as levered, if not more, to the price of silver, but it's actually got, silver in the ground. It's a silver producer. You don't have either of those same issues that the leverage ETFs have. So if you're want to speculate a little bit on the price of silver, maybe instead of looking at those ETFs, you want to look at a company like First Majestic.
Yeah, those levered ETFs, they're great for traders if you're right in the short term, but long term.
Short term being like a couple of days or a week, really, ideally.
Right, because there are costs, and that leverage, that 2x becomes 1.5x if you hold on to it too long, right? So If I want leverage, I'm going to go to a miner that I think is well positioned to offer that leverage. And that's what that portfolio, I believe, will offer. So yeah, I personally don't use paper products anyway. So, right, I'm going to own the physical, or I'm going to own a miner, not a futures contract.
All right, great. Well, Jeff, as we wrap things up here, is there anything else going on in the metals or mining space that you think folks should know about right now?
I think we should expect some consolidation here. It's totally normal for what the prices are doing to do that, to cool. I think, at some point here, though, there's going to be another leg up. And of course, all the things that Mike Maloney has talked about, some kind of reset in the monetary system, especially as it relates to the currency, that's only going to strengthen the case for gold and silver and push them higher and higher. So we're in a bull market. That's the message. We're in a bull market for gold and silver. Dips should be bought, and don't go crazy. But this is a sector that, I want to be overweight, because just by default, everything else is bloated in value right now. This is the one that's offering, especially silver, the best value in terms of where it's priced now versus where it could be going. So I do think this is a time to have meaningful exposure, if not overweight exposure.
Meaningful exposure, if not overweight exposure. Okay, great. And Jeff, you do a very good job of posting updates to kind of how you're looking at the markets, and even sharing when you buy a new miner, which one you're buying and why. So people can follow you, I believe, both at goldsilver.com and on Twitter, correct?
I write exclusively for gold, silver on the gold and silver markets. So if you sign up there for the newsletter, you get all that before the public. And I share everything, including my own personal picks, on Twitter at The Gold Advisor. It's hard to provide a lot of in-depth updates on Twitter, right, on these things, but I'll comment once in a while. And if I do add something, I will disclose that on Twitter. That's kind of been my promise to Twitter. So.
All right, awesome. Well, folks, if you're interested in following the miners and you're not yet following Jeff through those two channels, you should do so right now. And for everybody else that has not yet seen Jeff's video where he outlines the portfolio that he's built under GDX Jeff, go to wealthion.com/GDX Jeff and watch it there now. Thanks so much for joining me, Jeff. Everybody else, if you like these videos, want to see more of them, please support this channel by hitting the like button, then clicking on the subscribe button below, as well as that little bell icon right next to it. Look forward to seeing you when I'm back, Jeff. Everybody else, thanks so much for watching.
Thanks for having me, Adam. Talk to you again soon.